Thank you everyone for joining. I'm pretty excited for today. We got a big part of the Procyon team here. I'm here with Phil, founder and CEO of Procyon, as well as Antonio, the CIO of Procyon, and April, the director of financial planning. Today we're just going to have a nice conversation and kind of go through everything that is Procyon. And there is a Q&A box at the bottom of your Zoom screen. Feel free to fill that in. We're going to leave some time at the end of this to make sure that we can go through your questions. Anything we don't get to, we can definitely get back to when we go offline. But yeah, thank you everyone for joining. And Phil, let's get started.
I love it, Matt. What would you like to ask, my friend?
Well, I think tell us the story of Procyon.
Yeah.
Kind of its founding roots and take us up to today.
Yeah, I love it, Matt. But first and foremost, on behalf of Procyon and all the partners of Procyon, we like to welcome all the clients and the team members of Corthell to Procyon. We know you have a choice, and especially an inflection point like this transaction warranted, that choice is ever so evident and obvious. And we are amazingly grateful and humbled that you chose to join the Procyon family. And our job is, and we will work tirelessly to do this, will be to exceed your every expectation. That is our job, and we will work tirelessly to make that happen. So welcome to Procyon. Let me tell you a little bit about the history of what we did here, Matt.
Yeah.
So we just celebrated 8 years. June 2nd we launched our firm June 2nd of 17. And myself and my other 4 founding partners essentially spent a couple of decades plus, Matt, in the larger firms, the Merrills and the UBSs of the world. And at a very significant level, our team, when we left UBS, was, if not the largest, one of 2 largest teams in the country. And I sat at a very high level executive position at the firm. And so I understood exactly how the sauce was made, so to speak, right?
Right.
And what we figured out was that it was very tough, and I don't begrudge those large firms, Matt, at all.
Sure.
But it's very tough to manage very large firms to the level of elite teams and their respective clients. And so what ends up happening by default is that teams like ours, and therefore our clients, they're not getting as a bespoke experience
Sure.
as we would want. And so our team decided that if we're going to really do this and serve our clients the right way, we had to do something that we can build from ground up and deliver the services and deliver the exact way the firm works, the way that our clients would hopefully want that to work,
Sure.
Versus the other way around, right?
Right.
And so that was the foundation of Procyon. It was building a firm. We like to say we are a firm built for FAs by FAs.
Right.
And why that's important is because FAs are the trusted partner of clients, right? And so we sat in those seats. Some of our partners sit in those seats today. And so we understand what clients' needs are, and we're just trying to be exceptional in our fulfillment of those needs.
Sure. And, I know we talked about this at length, but Procyon is obviously a growing firm. How do you maintain that high level of service as you grow? In other words, don't become what you left, kind of thing.
It's interesting. It's a great question, Matt. And I think our firm is built very differently in that we have specialists like Antonio, our CIO, and a huge department behind him, right, on the investments team. April, our director of financial planning, right, with the financial planning team. Our support team, our business services team. And why that's important, right, is that what we're trying to do for our FAs is recognize the fact that managing relationships is very hard.
Right.
It takes a lot of effort to do it properly, right? And so if we can eliminate some of the things that our FAs have to do in order to execute for their clients, and they could partner with an April, they could partner with an Antonio, they could partner with our business services division, right? As a way to kind of holistically serve and resource the client, our FAs can be more strategic as to how they think for the client. Right.
Yeah.
And so it becomes less of a tactical operation. Like, I need to do this. I need to input the financial plan. I need to execute this, and that. It's more of, no, I could be the strategy. I could be the captain of the ship and go to my amazing team members to have them execute on behalf of the FA. On behalf of the clients.
Of course.
And we also have very stringent service benchmarks, meaning we don't allow our service team, our client service associate team, to be too overwhelmed with client load. We pay very particular attention to what that level is, and so the client experience can feel like it should, like you're the only client on the firm, right? That's what you feel like sometimes, right? And so that's how we think about bringing services, irrespective of our size.
Yeah.
And I would tell you that our size, Matt, actually helps us in that regard because it allows us to bring in amazing talent like Antonio and April and others to fully and holistically serve our FAs and by default our clients.
Right. No, I agree. And coming obviously from a smaller firm where I've worn multiple hats and done, the back office posting, the trading, all that kind of stuff. At times it can be it takes you away from clients. So
something has to give.
Right.
And you and I talked about that, right?
Oh, yeah.
And you have a very substantive book, right, of clients. And so, if you think about it, if we can allow you to now partner with true high-end specialists in order to bring services and resources to the client, it frees you up a little bit more to think on behalf of those wonderful clients that you have, right? And so, and again, I think size helps.
Yeah,
I think size helps in that regard. And so I do think scale matters in this world because I think clients are looking for and demand more from their FA relationship, and that's what we're trying to deliver.
that makes sense. And can you talk about, you brand them as verticals, like the different elements, at Worcester Corthell, we had investments and we had planning. There's a little bit more here. Can you talk about that?
Yeah, so when we launched the firm, we had a very significant retirement engine, if you will.
Sure.
Consulting on retirement plans, both pension, cash balance, 401ks, 403bs, 407s. Anything retirement, Matt, we're one of the best in the country.
Right.
And so when we sat here and we launched the firm 8 years ago, we said, how else can we serve these clients that are dealing with their organizations, right? And immediately came to mind is healthcare. Right? The people that are making the 401k or pension decision are making the same decisions, or those are the same people, excuse me, that are making decisions about healthcare. And so we immediately launched a JV to procure healthcare.
Mm-hmm.
We tested the thesis as to whether or not our small to mid-sized companies would enjoy a one-stop shop with total benefit consulting, and it worked out brilliantly. Clients loved it. We became essentially an adjunct to their benefits operation, and that allowed us to now think, how about our families?
Right.
So we cured it on the institutional side, but what about our families? So when you're sitting at the kitchen table, what are our families dealing with? Well, it's table stakes right now to do wealth management and financial planning. You have to do that, and you have to do it exceptionally, right, for clients. They expect that, all right? So we got to check those off as being table stakes.
Okay.
What else would we be thinking about? How about accounting? Right, most of clients are dealing with some sort of accountant, whether it's a simple 1040 or a very complicated 1040, 1065. Right, so bringing that under the umbrella so we can help service that for clients. Property and casualty insurance. Right, what we don't want to have happen is a black swan event where one of our clients is underinsured, and we have all this unbelievable wealth that we've accumulated in their investment account, and one uninsured event takes them out.
Sure.
Right. And so we want the ability to actually sit back and review those deck pages with our partners and make sure that they are properly insured. Right. And then, of course, our trust services. A lot of our clients have accumulated wealth, which is amazing, and they're thinking about the legacy of that wealth. How do I use trust in order to affect the tax situation in a positive way? Right. How do I establish foundations? Those types of things for our clients. And so if you think about it, and those services are just available for clients, right? We want them to know that if you're their trusted FA and their trusted partner financially, we want them to know through you that we can solve for as much or as little as you want us to, but we can solve for it all if you choose. Yeah. So that's kind of the thinking. And there's this moniker of family office out there. Okay. Well, when you think about family office, you think about billionaires and all that stuff, right? That's really not our client. Sure. Our clients are generally people that have made it on their own, okay, either through a family business or they've climbed the corporate ladder and they've done exceptionally well. They've had an event and they've ended up with money that they might not have otherwise thought they would have had.
Sure.
Right. And that to them is their billion.
Right.
And so what we want to do is build a firm that takes that wealth and makes sure that they are serviced like the billionaires that they are, right, in their minds, right? And so if someone has 5 million, 10 million, $100 million, which is a ton of money, we want to make sure that they're treated like they should be treated, because that accumulation of wealth was the hard part. All right, our job is to properly make sure that we're fencing off that wealth in a way and servicing that wealth in a way that makes them feel like, they've accomplished it, all right? And they can sit on top of that pedestal and feel proud and know that all the services we handle for them below.
Right. So one thing you haven't touched on yet that I thought was unique, and Tony will get into this in a little bit, was the investment vertical of the firm.
Yeah.
What I found interesting is a lot of other firms will charge if you use their own fund family's investment products, but Procyon has made the conscious decision to not have any additional billings, but still make these investments. Can you talk about that decision and what you're trying to do there?
Yeah. So what we're trying to do at Procyon is deliver exceptionalism across everything we touch for our clients, investments included. Right. And so in the investment schematic, we did a couple of things that, quite frankly, cost the firm money, but we didn't parlay those costs into our clients. We're giving it to them as a value add.
Right.
Three distinct things, right? And I think you know this, Matt, but I'll just share it with the audience. We launched our own private equity vintage fund. We launched our own evergreen fund, which is essentially a hedge fund and those types of things. And we also brought in a manager of the decade management team that manages our U.S. equities as part of Antonio's team. And I will tell you unequivocally, 9 out of 10, if not 9.5 out of 10 RIAs that build those types of things for clients are charging clients additionally for those things. Right? Because they procured them, they're special, you're going to pay for it anyway, so let's do that. We very deliberately decided not to do that at all.
Right.
We want to bring the best of thinking in the AI space to our clients. And so we're spending the money on third-party due diligence and packaging it in a way where clients don't have to sign 45 documents. They can sign one document and get one K1 on the AI in the AI space. And from an investment management standpoint, U.S. equities are a large allocation.
Just interrupt. AI meaning alternative investments, not.
That's right. Yeah. Thank you for that. Because that word does mean different things today, doesn't it? Yes. Yeah. Alternative investments. Thank you, Matt. And on the domestic equity side, that's a large allocation for a lot of families, right? And so Antonio's thinking is we need to be really, really good here. And so bringing in, expanding that team and expanding Antonio's team has done wonders to do that. And again, they already had a significant SMA or fund out there, right, that they were charging for. Right. We brought them in-house, and there's no charge to our clients for that.
Right.
Again, as a way to just add more value to what we're bringing to the table for our clients.
For sure. And that's definitely something I noticed and kind of raised my eyebrows when we started talking.
Yeah, it's most RIAs are not doing this.
No.
Right? Because what they're trying to do is maximize P&L. And I get it. Listen, we're business owners, right? So you have to make sure the firm can survive, right? But it doesn't need to survive that way. Right? There's ways to add significant value to your clients without having to worry about, charging them for everything that you're bringing to the table.
Right. No, that makes a lot of sense. So I'm curious, you've talked about a lot of the verticals and all of that. What is it from Procyon's perspective about our clients that really said, hey, this would be a great match?
I think they were a great match.
Yeah.
You know what I mean? So don't forget, right? Yeah. So what was really cool about Fiore Corthell is that one of your clients, Melissa, is a partner of Procyon. Right. And so she was able to give us a very significant inside view as to how you service clients. Right. What was the ethos of Fiore Corthell? And let me tell you, and you and I talked a lot, Matt, right? It was very, very, very similar.
Yeah.
Right. And I think if we can fast forward Fiore Corthell a few years out, you would have started to build out what Procyon already has.
Exactly.
Right. And I think what you decided, and you and Catherine decided ultimately, was, hey, this is a way for us to do it right now for our clients versus taking the expense and the risk of trying to do it ourselves. We have a proven model here with people that are aligned culturally with us, that think about client-centric approaches the way that we do, we should just do it with them,
Yeah.
right? And celebrate that time.
And I'll just add to, there were three things that we were looking for if we were going to go down this route. The first is, can we get more for our clients, which, the investments, and then let alone all the other verticals, that hit it. The second was opportunity for our staff. So we talked about at length that a lot of the women on our staff in particular now have more career paths where they were a little stuck where we were. And then the third thing is we wanted to have people that we enjoyed being around, right? And we've definitely covered that pretty well.
That's great.
I just want to see if, just kind of give you an open question here before we go to Antonio. Anything I didn't ask you that you'd like to share about the firm, or, yeah, I'll leave it there.
Listen, we are a client-centric firm. Mm-hmm. We were a client-centric firm at the big firms, right? Yeah. We just couldn't service them the way they wanted us because we didn't control the end result of that service, right? Management did, right? We are now management, right? And so we get to execute exactly how our clients need us to execute. Sure. And that's a massive differentiator, right? Because we're not managing to 15,000 FAs, right? We're managing to a select elite few FAs that by default have elite clients that we get to manage to. Right. And so when an FA asks us, hey, can we consider doing X, Y, and Z? We know that's coming from the right place, versus trying to make an extra dollar from a client, right? And so, the firm is built very, very differently than how a lot of firms are built, especially the large firms on Wall Street. And I think if you see the asset flow from the large firms to the RIA space,
it's crazy.
It's significant. Yeah. The RIA space, the independent space, Matt, is winning. You guys know that. You guys are pioneers, which Corthell was pioneers in that space, right? And I just think that Procyon is a notch above in that space as one of the best in the country.
Sure. Awesome. Well, thank you. I do see the questions popping in, so I do appreciate that. Again, we will get that at the end here, but for the time being, I'm going to put Antonio up here. And Antonio, would you talk a little bit more? I know we got into investments with Phil, but if you could get into a little bit more there, that'd be great.
Yeah, no, thanks, Matt. Thanks, Phil, for the intro. You stole some of the thunder, buddy, but that's okay.
You know what happens when I start talking, Antonio. You know what happens.
I do. That's why we're all here, buddy. Look around us. I think you guys summed a lot of it up, and I think I just want to make sure that our team, the investment team's approach, is from the fiduciary standard. I was a portfolio manager, an investment manager, but also a fiduciary advisor and an RIA that had been formed in the late 70s that I worked for many years. And so much like Matt, I cut my teeth, really focused on client service and doing what's best for the client. And so like Phil, though, I came out of a large financial institution, and what winds up happening ultimately is they wind up having products, and they want to put products in accounts, and they want extra fees, and they force things to happen. And that's the opposite of what we do. We're focused squarely on designing the right portfolio for the client. The revenue to Procyon and their advisor is the same, whether they own shares of Apple, they own a T-bill, or they own a private investment, or they own our managed platform. The revenue to the advisor is the same. Our advisors should not be incentivized one way or another to put something in an account that may or may not be appropriate for the client. So that's the basic standard from which we all begin. And the investment team is built around that standard. And so when you get to the independent world in the way that we are as an RIA, and now we get to work with people like Matt, and we've had other firms in the past that we brought in, what winds up happening is the floodgates open. And now you're sort of, as an investment person, you've got more than you could possibly ever want from an investment choice perspective. And so our job here at the firm is to really filter that down and find the best of the best and allow the firm's best thinking to kind of permeate the investment committees and rise to the top. So we've created a process around this that works quite well. But again, just really quick, the background is, no commission, no extra fees, no layered, extra management fee, nothing like that. And that's in the fabric of the firm when it was begun and even ahead of that. So that I want to make sure is very clear. When we're constructing portfolios, sure. Do a lot of people own Apple just like the other client? Sure. But the truth is that when you're working with your advisor and you're working with the advisor and perhaps even directly clients working with our investment team, they design the portfolio around your personal preferences and your time horizon, and they customize it to your tax situation, whatever it is that you need. We've got access to, as I said, more than we could ever imagine. Everything from separately managed accounts to directly managed accounts here. ETFs, we're very fee sensitive. We try to keep fees as low as possible on the investment side, because we're in the same team as the client, right? If the client's performance is better, then the revenue to the firm is better. So we want to make sure that ultimately lines up. And yeah, so we build around that and we customize around that. We've sourced. Go ahead, Matt.
I was just gonna, Antonio, I know we've talked about, the secret sauce of Worcester Corthell and how we build portfolios, and we've compared them with how you guys have built portfolios. Could you talk about where you see some similarities and where you see some differences?
Yeah, no, similarities are in so much as we're focused on tax efficiency, focused on low cost, right? We want to make sure fees are low. And that kind of comes with the culture. But I think from an analysis perspective, what we're not doing is we're not, buying highly concentrated portfolios, right? We're not going to buy a portfolio of 10 stocks and say this is going to solve all your financial planning needs. We like broadly diversified portfolios. We're globally allocated, meaning that we've got domestic bias, but we have investments outside the U.S. The vast majority of those at the firm are going to be probably ETF, mutual fund managed accounts, much like Worcester Corthell clients are experiencing. But more and more, the demand is there for individually managed accounts. So our largest clients sometimes want to have individual stocks managed in a way that's a little bit different than maybe an ETF would provide. And our investment team sort of works around that to build it. And I think from what I understand and from all the work we've done and the conversations we've had, your clients are not that different than our clients, and they're looking for a lot of the same thing: exposure, no concentration, risk management, essentially making sure that things don't get too far out of whack, and that you're rebalancing and you're getting all the information to the advisors that they need. So fundamentally biased, right? So you guys, from what I understand, and from the research we've done, you're not buying momentum-based ideas, right? You're not saying, oh, okay, let's look at the momentum here on these 10 stocks, and we're going to now add that because we're going to trade it in 3 weeks and create all kinds of transactions. That's not what we're doing either. We like to make our calls long-term in nature. So long-term can mean different things to different people. I would say at least 12 months. Most of our clients don't like paying short-term cap gains. So we try to keep that at a minimum. And our outlook is somewhere between 1 and 5 years after that, right? So we're not looking 30 years out or 40 years out like an endowment fund might, but within the financial planning scope and within sort of the controllable future, that would be, within the next, 5 years or so. So fundamentally biased is exactly where we are, domestically biased, tax efficient, cost efficient.
Yeah, and I would like to add in there, early on in this process, we met. I met with Antonio and a colleague, Mark, and we went over the portfolios. Antonio said, hey, they have a domestic bias. Well, Worcester Corthell quite literally had the exact same domestic bias which is to say we're overweight U.S. equities, underweight international. We have the exact same mix. We have looked at it, and roughly 70% of the portfolio overlaps in terms of the similarity of the underlying investments. I could see a question popped in here about performance comparisons. That was something I also did, and I'm pleased / disappointed, but pleased that Antonio and their team did beat our mix by about 0.5% per year over the last 5. There is some play with that depending on how aggressive you were or how conservative you were, and then any nuances to your own specific situation. But roughly, that is what I identified when we were doing our due diligence on Procyon as well. So there are many overlaps and enhancements, frankly.
Yeah, and I would even say, the clients could look forward to regular communications, so when we're making changes to the portfolios, the advisors are going to be up on that. They get communicated to that regularly. Clients are going to get client-facing write-ups on a quarterly basis at the very least, and oftentimes interim write-ups. We have Equity Insights that's coming out on a monthly basis by our US Equities division. So there's a lot of stuff going on. We have the themes that we think are quite interesting and add alpha to the portfolios that I think most people will resonate with. But yeah, I don't. I would find it surprising if your clients thought that what we were doing was vastly different from what you were doing. And I think that leads itself back to, how good a job you've really done there for the clients and how we just want to help take you to the next step.
Awesome. And then Antonio, if you could maybe finish with, so we're definitely in agreement that our core portfolios are highly similar. Could you talk about how now financial advisors, our team, will be able to use different tools like private equity, like private credit? These are things that we haven't had exposure to, or opportunity zone investments, right? How does that play into the portfolio for our clients, and what's the communication like with the clients, and what can they expect for clients that does make sense for their situation?
Yeah, absolutely. A big part of it is educating the advisors, right? Because the clients rely on their advisor from Worcester Cortell to help guide them on what's next and what's appropriate. So just because we're doing it doesn't mean it applies to everyone all the time. We know that. But in terms of what we hope to be able to provide as additional resources, number one, our quant trading strategy, which is a fundamentally based public equity trading strategy where you own 30 or 50 stocks, and it's very much pegged to an index. And we find that is an excellent way in the financial planning world to start to develop confidence and risk management measures around public portfolios. So as we educate, the Worcester Cortell advisor group and our own advisor base on how Alpha Quant can help that, and that's just on the public equity side, that's unique to RIAs. You don't find that outside of DFA. And then AQR. Those are the two big quant firms, and they're untouchable. But for us, we've got a really good quant management team, and we think the process is awesome, and we're delivering that. So I think that's something education-wise that'll show up. It'll add alpha, which is increased return, is our hope, and it'll also add additional risk management because we don't have market cap weighted positions all the time. The other thing that you're going to look at is education around how alternatives fit in and what that means, but a firm like Procyon. Because when you get to a certain size, alternatives continue to open up for you. You're able to do things that you're not able to do at a smaller firm, which is to pool like-minded clients who want differentiated return streams into a single entity, and now they put that together and have access to private equity and or hedge funds where they wouldn't have access on their own. So we're educating around that. But I would say that, these things are not, we realize in the private wealth world, these are somewhat new things, even to our clients. And so I don't want, your clients to think that they're automatically going to be pitched something. We don't pitch anything. We don't sell anything. We basically curate things for our clients that solve their needs. And so as we educate and we go through this, your advisors are going to be brought up to speed and educated on things that, quite frankly, they absolutely could have on their own, but perhaps maybe needed a little bit of a leapfrog to get to that point, and that's what we hope to provide. So all that stuff is on the menu, and when you get to a size like us, quite honestly, the opportunities for things outside of the typical ETF mutual fund portfolios are vast, and really whittling it down is the hard part. So I think that what's going to happen ultimately is the belief we have in alternatives as an asset class is basically enhanced returns, reduce volatility. If we start to design more predictable portfolios, then our financial planning will be a lot easier for our clients, because that's the one variable that we have to model with 10,000 different scenarios, right? So instead of modeling it that way, why don't we just control what we can? And so by introducing a lower vol asset class, it actually allows us to do that. And as we go through this process, you can see the proof, and we'll showcase that to the advisor group.
Yeah. And I'll just say, anecdotally, obviously it's, third week here at Procyon, but I did have a client situation. Client had a big capital gain, and they wanted to see if there are ways to mitigate that. I worked with Antonio and his team, and they talked to me about some real estate investments that the government basically incentivizes, where if you help develop poor communities with new real estate and all that, you can defer capital gains for 2 years at this point, and then if you hold that investment for 10 years, there's no capital gains on that investment. And again, this is something that through the dedication of the investment team, I now know about that we didn't really have access to prior to at Worcester Corthell. So
Yeah. Sorry, I didn't mention that, Matt, but yeah, you're right.
yeah,
Again, there are a lot more solutions out there than we know about. And so I think, having an issue like, hey, is there a way for me to not have to pay this cap gain on this sale of this asset? A lot of
right.
people have concentrated in Nvidia or Microsoft or Apple, or how do I mitigate the risk on this, and how do I move to the next phase? But yeah, we've got an outsourced investment team as well for alternatives that does a ton of actual, due diligence, boots on the ground that we actually pay to do that stuff. So yeah, qualified opportunity zone is something that, with some of the recent changes and the bill that has passed, as well as a lot of the concentrated capital gains that clients have, is a good option for trying to mitigate some taxes for sure.
Sure. Well, thank you, Antonio. Let's hand it off to April here and talk about planning. And here we go. All right, April, it does look like you are on mute. There you go.
Okay, how's that?
Perfect, perfect.
Perfect. All right. So guys, welcome. I have 20 years as a certified financial planner, joining a whole bunch of other wonderful financial planners at the firm. I am used to working with individuals, business owners, retirement plans, and I'm a planner because I love this stuff. I'm at Procyon because we treat clients like they should be treated. So here, we believe that managing wealth is more than just investments. No offense to Antonio and his team. We utilize a comprehensive approach that includes all aspects of your lives. For example, taxes, insurance, estate planning, retirement planning, pretty much anything you can come up with that touches your financial life. Specifically, what does that mean for you? I'm hoping one of these things actually piques your interest. It could be something like helping you make heads or tails of RMDs. When, how much, deciding how to handle stock options or grants, Roth IRAs, to convert or not to convert, structuring business sales, figuring out how to pay yourself in retirement. You have, quote unquote, received, albeit earned it, a paycheck your entire working life. Now, all of a sudden, you're in charge of making that distribution yourself. So we'd like to help with that. We want to think through the scary stuff, like what happens if, God forbid, there is a market downturn when you have decided to retire. We can model that and take a look at it. And also Social Security, another phenomena that is hard to wade through. How do you optimize that? And it's going to be different for every client. This is the kind of thing that my team is going to partner with your advisor to analyze and provide you with solutions. We are incredibly excited to have you guys join us at Procyon.
Awesome. Thank you, April. Can you talk a little bit about what some of those stress tests look? I know I often get questions about clients of like how do we check to make sure that they have a high likelihood that the money will last throughout retirement. What are some of the stress tests that you and your team kind of do for us?
Each one of us has stolen a little bit of the next person's thunder. Antonio mentioned something about stress testing, looking at thousands of scenarios. So what we do, and it's got a fancy name, Monte Carlo analysis, but what we do is we simulate various lifetimes of investment returns. And then 1,000 is a great number, right? Because we can turn that into a percentage, say 85%. And if we get 85%, we feel pretty good with that. We feel like that's a very successful. That's one way we can do it. I've got some other tools at my disposal to address some of the more common concerns, things like I mentioned, which is what happens if we have a market decline at the beginning of your retirement period. What if you simply want to play around with cutting or increasing your living expenses? We can model a lot of that stuff at the touch of a button and take a look at it and see what works.
Awesome. That's very helpful.
And Matt, just to underscore what April's saying, we're a planning-based firm, right? And so when clients join Procyon, the first thing we're doing, think about building a house. Right. You're not running to Home Depot just buying 2x4s randomly, right?
Especially me.
So exactly. Someone's giving you the architecture by which what to buy and how to do it, right?
Right.
That's exactly how we think about it, right? So clients might say to us, "Hey, I'm coming to Procyon." Awesome. But we're going to take them through April's team with April and take them through the planning process, because in order for us to get Antonio's team dialed in to what it needs to look like from a risk standpoint and a performance standpoint, we need the work done architecturally by April. Right. And so, I think it's really, really important to understand that we are a planning-based firm, because that's where it all starts. And quite frankly, that's where it should all end.
Yeah. And just to echo, we may not use those words at Worcester Corthell, right? Planning-based firm, but that's the same ethos, same kind of style that we've done it. There's someone on this call today, they said, hey, I'm looking to build a house. And that was a material change from their plan. It's like, okay, we need to marry the plan with your investments.
Right.
We need to raise some cash. If you're going to do this and you take a dip and you're in the middle of this build, this is not a good scenario, right? And then the portfolio is the outcome of the plan, right? So it's always tailored to whatever the client needs. And, we can go up risk, down risk, whatever's necessary.
Well, we love to tell our clients, and Matt, exactly the same scenarios exist with our blocks, right? What we like to tell our clients is anything is possible, just talk to us. Right. Let us model it out, and so we can actually show you the consequence of the various decisions you want to make, right? But if you want to do something, awesome. We're not going to say no, right? Who are we to do that, right? But let's plan for it, right? Be it a second house, be it another car, be it a boat, doesn't matter, right? We want the phone call to say, hey, I'm going to deviate a little bit off the plan. Here's what we're thinking about. Run the plan. Let's see how it looks, right? And we do that all the time for our clients, and that's the awesome give and take that we have. It's not that planning document shouldn't be something you do at inception of a relationship and then it goes in a drawer.
Right.
That should be a living, breathing document, right? That should be reviewed at minimum once a year. Okay, nothing changes, but it should be reviewed all the time if something were to change. Right. And irrespective of when that is within the given year.
Right. Makes sense. Let me add Antonio here as well. Add spotlight. Okay, so now we got all three of us here. We've talked a lot about families, which primarily that's what Worcester Corthell is made of, is families. But we do deal with a lot of nonprofits, endowments, and things like that. Do you think you could weigh in on how Procyon kind of serves those types of clients?
Yeah, I would probably suggest to you that Procyon, well, going back into the 90s, we cut our teeth, our team cut our teeth in the institutional world. Right. Our first large account, north of $10 million, was a defined benefit plan, right? And that led to defined contribution plans. That led to endowments, right? And so we've served that realm of institutions for the better part of almost 30 years now, right? So private wealth has always been a wonderful adjunct to that business, because what happens by virtue of serving those institutions is people on those boards or people within those organizations raise their hand and say, hey, I love what you're doing for the endowment. I love what you're doing with our pension plan. Can you help me? Right. And that's what led to an amazing private client business today. But our roots are born in the institutional side of the equation for sure.
And then Antonio, maybe you can touch on, if we haven't hit it already, some things that maybe you do a little bit different for those kind of endowment like clients.
Yeah, endowment clients, portfolio structure, number one, is usually different. And if you are new to endowments, you may not even know that, right? So we try to educate oftentimes, and then we design and write and maintain and update an IPS, investment policy statement, for these accounts, because typically an endowment or something charitable is made up of a board of trustees or made up of family members or made up of a group of people that need a governing document of some kind, and they don't have it yet, or they need an update, or they need a review. And so an IPS is really kind of a crucial part of working through portfolio management and building, and then the liability of being, on the board of some of these kinds of things when you take that on. So we help them mitigate that risk, and then we start to give access and design around what the goals of the endowment are. So, if there's an income component, then we want to design around that, obviously. If there's not, then we're going to consider it. If there are liquidity needs, if there are lack of liquidity needs, right? We want to sort of build around all of those things and deal with it. We would add, likely there's some sophistication around those endowments, but that sophistication is a little bit different when you have a different level of liability. And so for us, we can kind of step in, take the reins of that, design it, manage it, report it, make sure everyone's comfortable.
Awesome. Thank you. So thank you to our clients here. It looks like we've got a good number of questions that I want to start diving into here. First one here is about, can you talk a little bit about compliance of the firm? How does the firm ensure, and maybe do you guys, does Procyon take custody of client accounts? How does that work?
Yeah, so this is very different than the world we came from,
Yeah.
right?
Yeah.
At UBS, at Merrill Lynch, they house
Right.
the assets, right? They're the
Yeah.
custodian, essentially, right? And we're the FAs at the same house,
Mhm.
right? What was awesome when we launched this firm is that we like to call it the triangulation of advice,
Mhm.
right? Where the custodians, Schwab,
Right.
okay? Schwab's reported earnings, okay? They have 11 trillion under management,
Mhm.
okay? Their cybersecurity, fraud protections, all that is substantive, right?
Yeah.
But they're our custodian. That's where the assets are held. We also have Fidelity, as you know, Matt, right? But the assets are not held in Procyon's trusted trust bank, right? Or Procyon's bank, right? It's held at either Schwab or Fidelity, number one. And number two, the investment management, if we use any investment management outside of the stuff we're doing internally, right? That is also separate and distinct from what we're doing here internally. And so what we're trying to be is uberly transparent to clients, and so they can see exactly who is doing what for them. And we're being paid for the advice that we garner and we give to our clients, right? That's what kind of happens. But listen, there's a lot going on right now with cyber.
Oh, yeah.
I feel very confident that we have two of the largest custodians for our clients. And so I feel that our clients' money is uberly safe. However, here at Procyon, we have our own cyber security committee, which is also very substantive. And we're testing everyone at this firm all the time, right? But what ultimately really just solves for it is making that phone call to a client when you get an email that says, hey, can you move $500,000 to this account, right? We do nothing without a verbal approval, no matter how long it takes, because that is way too important not to be patient, take a little more time.
And that's exactly how it was at Worcester Corthell, verbal authorization on any money moving in or out.
Right.
And just like Worcester Corthell, Schwab was the custodian. They actually held our clients' money. What our clients actually give us access to, and now ultimately Procyon, is the ability to trade so we can implement the investment recommendations that we've agreed on together.
That's right.
So I got a question about commissions and compensation. Could you talk about commissions at Procyon? Are there commissions? How does that work?
No, we're essentially a fee on the RIA.
Right.
That's what we do. Right. We do have a friendly broker dealer, to be frank.
Yep.
But that is really to house legacy 529 plans, legacy annuities that clients might have that we don't want to sell.
Right.
Right. And so that's what that's for. 98% of our revenue is all fees.
Right.
There are no commissions here.
Right.
We don't trade stocks for commissions.
Right.
If people want to have a fun account, their Vegas account and trade NVIDIA and do all this great stuff, we'll open up a Schwab account for them and let them have fun for zero.
Right.
That's not our business at all. But as it relates to how that results in paying our FAs and our planners, right? And the rest of the team, we found that FAs do not want a ceiling as to what they can make, right? And so we've opted for a system that allows our FAs to make as much as they would like. And so the salary bonus structure is not what we deemed appropriate for our FAs, because if they want to go out there and work and continue to drive clients into their book of business, then they should do that and be paid commensurate with that endeavor.
Sure.
Right? And so we think that's a good model. We think that we get the elite advisors in that regard. And then the rest of the team, for instance, our investment team, Antonio notwithstanding, Antonio's a partner of the firm, but our investment team, Massimo and Catherine, there's a bonus structure for them based upon performance.
Right.
Right. So how much they're managing for the firm and performance. And so, they're accountable to perform for our clients.
Right.
Right. They're not just here and running the S&P 500. We don't need that. We can buy the SPX, no problem. Right. We need to do better.
Right.
Right. And so there's a metrics there as well. And then everyone at the team is, the way that we think about bonuses is that everyone at the team is riding or dying with the firm, right? So everyone is invested on the success of the firm. And why that's important is because it's there's so many people touching a client.
Yeah.
And that's the model, Matt, because we want that client to feel fully serviced, and we need our entire team to be fully engaged with that client, right? And so by having a bonus structure that rewards, the performance of the firm, year over year, and having our team be fully involved with that bonus schematic based upon the performance of the firm has been very, very rewarding for our team.
And that's receptionist on up, right?
That's everybody.
Yeah.
That is everybody.
Awesome. Another question. We obviously went through a lot of paperwork to get here with our clients, and we had those forms to sign, the LPOAs, and maybe this one's for you, Antonio. Could you talk a little bit more about the TAMP? That is something we didn't have at Worcester Corthell, and I know our clients were, trying to understand how it really benefits them and all that. Could you talk about, does Procyon receive any piece of the TAMP, and then what are the benefits of the TAMP for the right client where it applies, obviously?
Yeah, no, that's a great question. I didn't have a TAMP in a previous life either. As a matter of fact, I don't think Phil did either because he was at a place that was just UBS. I was at an RIA that used Schwab and we didn't have a TAMP. And then we're here and we do have a TAMP. And so to answer the first question, we get nothing from the TAMP. We use the TAMP out of necessity. And all of the costs that the TAMP accrues get passed through to the client, meaning that every fee that comes through for everything that we do is very transparent. And that also means that the onus is on us to get that fee lower if we can. So the TAMP purpose is basically a trading technology platform. That's it. I don't want to overcomplicate what it is and what it provides and what access we get and what deals we get, but basically it costs for the vast majority of our clients. Some of them have special arrangements and a little higher cost setup, but for the vast majority of our clients and yours, now ours altogether, it's going to be 4 basis points is the cost to have assets managed on this TAMP. And that's basically every client at the firm. My clients, your clients, all the clients. That's 1 basis point per quarter. And what that allows us to do essentially is trade all the accounts and execute on those trades in the most fair way at a very scalable level. So, when you're trading, if you have one model, let's just say you have one thing that you're doing every other day, that's easy. But when you have several different things you're doing at all different times, and some investors have, quarterly distributions or monthly distributions. Some investors have a quarterly dollar cost averaging investment that's coming in. So there's so many different moving pieces that it is required really for us at this level, at this size of our firm, to have a technology trading platform. And so it detracts from performance by 4 basis points if you look on dollar for dollar, but we believe it actually enhances longer term performance because we can execute faster in a more fair way. And when I say fair, what that means is that I don't want to sell, Apple for Mr. Smith in the morning and then sell Apple for Mr. Edwards in the afternoon. And now they have 2 different execution prices at the same firm. That doesn't make a lot of sense, both from a compliance and an investment standpoint. And so we find that doing it this way allows us to actually be a multi-custodian firm and allows the technology to permeate. We're currently working on, and have been for the better part of a year, a conversion of the TAMP, right? So there may be changes coming that will actually reduce the cost from 4 basis points to something lower than that. That is our intent, so long as the technology provides us with all the tools we need. So the TAMP is nothing more than a technology trading platform for the firm at large.
Yeah. And I'll just add to that, that roughly 0.5% that Procyon has outperformed our models, that theirs is carried out on the TAMP, and that, they were still able to beat us without it. And then also prior to, joining Procyon, Worcester Corthell had looked at a TAMP, and, we're a decent sized firm at 600 million, but with Procyon's, 9 billion or so, they're able to leverage that size to negotiate the fees lower than we otherwise could have. And there's additional investment options that, aren't just available off the rack at Schwab. That's in there. So
There are access to certain SMA managers, but rather than bore your clientele with the details on that. It does give us access to stuff that helps us solve problems for clients, but that's not the only, that's not the main reason we use it. It's simply a benefit of it that we can choose to use. But yeah, it's an in-between, essentially between us and call it the custodian.
Yeah. So the next one, it looks like it's kind of for me, but welcome Phil's commentary on it. But the question is essentially, what is my role in decision making at Procyon now that I'm here? So I am a partner of Procyon. I believe there's 16 total partners.
With you guys, there is now 15.
15 total partners. Catherine and I are obviously one of those. So what we really did is by selling Worcester Corthell, we took basically everything from that and put it into Procyon. We're not really trying to cash out. We're trying to stay invested and really betting on this firm continuing to do well, just like Worcester Corthell was doing well, since Al's retirement. But we, are part of that group of 15, and collectively, this morning we had our first partner call, and and talking about some next steps on things, and I love it. It's very candid conversations. There was disseminating opinions, and they all got talked in a good manner and all that, and ultimately came to a vote and everything. So it's good. It's a good team environment. Obviously, I'm still getting used to Procyon's operations in that regard. But yeah, anything to comment there?
Yeah, just a couple things.
Yeah.
I don't think we would have done the transaction, Matt, had you and Catherine said, "I want a full cash out."
Oh yeah, for sure.
It was imperative to us that
Yeah.
the generation that's running Worcester Corthell today is involved with us on a go-forward basis, right?
Yeah.
Happily, for the founding partners of Worcester Corthell, of course, right? They deserve it, right? But for you guys managing the firm today, it was imperative that you had equity in Procyon.
Right.
That's the only way that you can truly be vested in what we're trying to do. And as it relates to the partnership, I'm the CEO of the firm. I do not make decisions without large decisions without what you saw this morning.
Right. Oh yeah.
Right. We had a pretty awesome debate at 7:30 in the morning on some critical issues that we had to resolve, and those debates, I would argue, since day one of our launch, I had 5 partners. Okay. Today we have 15. Okay. Owners of the firm.
Yeah.
I would tell you that those debates, sometimes I hate them. Sometimes I like them, right?
Yeah.
But the end result is always what's best for the firm.
Yeah.
Always. Every time. Whether I win that debate or lose that debate, or Antonio wins it or loses it, it's the best outcome for the firm. And that's what's awesome about that debate.
Yeah. And I'll also share too, there was another question about, kind of like, hey, why are we selling now? Al retired maybe about 3 years ago and all that. And we talked about this. We were, Worcester Corthell in the post-Al years, we took, when Catherine and I took over, we were around 380 million or so. As of joining Procyon, we were at about 620. So we've done very well. But we believed, and I kind of hinted at this earlier, we're going to be able to bring the service level even higher with Procyon, all the verticals, the investment team, the planning team, all of this getting married together and getting the additional focus basically back on the clients was everything. That's kind of that's the main reason, frankly. And like you said, we could keep doing this, but it would have taken us probably 5-8 years to actually bring that, just like it took you guys about the same to kind of bring it to our clients.
We made the mistakes so you don't have to, Matt.
Yeah.
Right? Your clients don't have to suffer through what we suffer through, right?
I appreciate that.
It's interesting though, because the best transactions that we've ever done, Antonio was one of them. He was our first.
Yep.
Right? Joined us just as we celebrated a year.
Yep.
Okay. Antonio joined us. And now you guys being our most recent.
Right.
What's great about those is that you didn't need us.
Right.
Right? Antonio didn't need us. Right? Together, we can actually be better.
Right.
Right? And that is the essence of why these transactions are so important. We do not do a transaction a month.
Right.
Okay? We're lucky to do 3 or 4 in a given year because to curate the right the right transaction on the other side, like you guys represented to us, is very difficult to find.
Sure.
And so you'll see our team say no way more than we say yes. But when we say yes, it's because the collective nature of those two firms coming together is better than each of us independently.
For sure. For sure. Okay, so I got a question. When will I get to meet the team face to face? It is anonymous, so I can't tie it back to who said it. But really, anytime you want. I mean, we're fully operational in Glastonbury. I'm here in the Shelton office now. We are finalizing some, tech glitches with our CRM and getting all that kind of stuff, but we are working. So again, it is anonymous. I can't go back to you, but just reach out to me or Rick or Prasad, and we'll be happy to have you in and meet the team. And depending on where you are, if you want to come to Shelton and see the office and all that, we could arrange that too.
Yeah, and all the offices are available for all your clients, Matt.
Yeah.
Right. So yes, of course, we have a base now in Glastonbury, which we're very excited about because we love that area.
Yeah.
Right. But all the offices are available to clients if they so choose.
Yeah. Okay. Can we, there's a question on acronyms, going back a little bit. FAs are financial advisors, just to go back there. But so this is maybe like a portal question. I don't know if this is the best grouping for it, but can we get our personal portfolio updates via mail, not email? We've done a lot of email things. I don't know if that's something Procyon does.
Antonio, do we we have mail statements to clients if they choose, right?
Yeah, I would say that there are some very few on the margin that still would like mail. I have a couple, of course. I think the clients who switch over to either a portal or their advisor delivers it, hand delivers it on a quarterly basis or whatever it is that they want. It works quite well without getting the paper. But yeah, I mean, we certainly can deal with that. I don't think that's an issue.
Yeah, my mom, right, was a client of Procyon,
Of course.
right?
Yeah.
Who's 86 years old,
Okay.
does not go on the portal.
Yeah.
Right? She wants to go to the mailbox and
Yeah.
open up the Procyon envelope or the Schwab envelope and be like,
Yeah.
honey, I got your report today. You know what I mean? That's what my mom wants. And so, of course, yeah.
Yeah. And by the way, I mean, all this stuff's available on demand as well, meaning, so whenever you need something, if it's not in your hands and you need it updated, just give us a ring or an email. We'll figure it out.
Sure. Looks like we have time for one last question. It's about the P&C vertical, so property and casualty insurance. Are we an insurance agency? What carriers do we work with? How does that work?
I love it. It's a great question. Today, we have a JV with a couple of, I'm sorry, acronyms, right?
Yeah.
A joint venture.
Okay.
Very much how we start with the benefits stuff early on, Matt, in our launch.
Yeah.
We started as a JV to test the thesis. Do we like the team? Does the marketing work, right? Are we collectively serving the clients the same, right? We got to test that. And so the JV allows us to do that without making without exposing ourselves from equity or bringing them in the house, prematurely, right? So we had that today with two substantive firms, one in Long Island and one here in Westport, Connecticut. And we're testing the thesis. We've been doing it now for a couple of years. The thesis is working. Clients love it. Right. And relative to who the carriers are, it's what you would think about relative to more of the higher end carriers. It's the Chubbs, the Pures, the AIGs, the Cincinnatis, right? It doesn't mean we don't have access to, if you have a teenage kid, a 20-year-old kid, 19-year-old kid that we need to get for, we need to get something else, a progressive or something, we can do that as well. But it's so immensely important to have that vertical as part of our offering. And I will tell you unequivocally that the accounting vertical and the property and casualty vertical will be in the brand, right? We're just awaiting the right opportunity to curate that and bring them into the brand like we did benefits. Because the reason why that's so important for us is in order for us to fully control the service, you need to own it.
Yeah.
Right. And so I love what's going on right now with our accounting vertical. I love what's going on with our P&C vertical. I'm going to love it even more when we control the service. Yeah. Right. But we're not quite there yet.
Yeah, and to maybe answer it a little bit more tactically, Worcester Corthell has always been fans of independent agencies. This partnership is with an independent agent. They can shop around to multiple.
It is
carriers.
not captive.
Right.
That is exactly right. Again, it kind of goes with our ethos.
Right.
We're independent.
Right.
Right.
Exactly.
So we would never partner with an all-state agency.
Right. Right.
Because then we're captive. Right.
Right.
And so, yes, that's a very, very good point, Matt.
So, well, I want to thank everyone for coming this afternoon. I appreciate the time. We are going to make a copy or save the recording and send it out to you guys as well as the rest of our clients. So I do appreciate you guys giving us the questions to benefit the ones that can be with us this afternoon. And thanks so much. If you have any other questions, feel free to reach out to me, Rick, Prasad. We'll be happy to answer them if we didn't get to them today. So thank you so much. We'll see everyone.
Thank you.